Hello traders, this is Blake Morrow with Forex Analytics and you're listening to the week ahead video for August 11th, 2024. What a week it was and what a week is coming our way. It is going to be mayhem, and as it was last week, let's just hope it's a little bit more tame than last week. Anyway, as you can see over here, we're going to get into all of the things that are happening this week that could possibly move the markets. We're going to talk about the Japanese or Nikkei sell-off, first thing to kick off last week, and the market recovery. If you remember the title last week, could the markets bounce back? Well, they sure as hell did after a very steep sell-off. Anyway, this week is inflation week. Like I said, it's going to be another wild week. We have a couple central banks that are meeting and a lot of key data points like US inflation data and UK inflation data as well. A lot of UK data coming up, and we have some earnings still. So a lot to get through. Let's get to it. I do want to say though that, and let me go ahead and put up Forex Analytics really quick and talk about something. I want to say that we had a very successful campaign in July with the Trader Funding Program. Now, if you don't know what the Trader Funding Program is, remember this is a way that you can access larger amounts of capital and not putting your own capital at risk. You have to take an assessment. And if you take an assessment and you pass that, then you access a live trading account. It's a way that we allow traders to proprietary trade on a discretionary level our capital should you pass an assessment. One of the things that we did in July is we I did personally met with traders one-on-one, onboarding them into the Trader Funding Program, basically telling them what tools they have available, that you have available to you, kind of some tips and tricks on how I passed an assessment, what might help you out. And we found it such a success that from moving forward, now I want you guys to hear what I have to say because this is going to be new. Moving forward, if you take a Trader Funding Program assessment of $100,000 or more, okay, and you have a retry, you will get a meeting with me, because if you failed an assessment and it was over $100,000 assessment, I want to help you pass an assessment. So I want to have a one-on-one meeting with you, 45-minute consultation. So this way, we can see what you did wrong to try to help you pass the assessment the next time around. But anybody who's new to the Trader Funding Program, it doesn't matter if you're a $25,000 assessment or $1 million assessment. You're going to get a 45-minute consultation with me if you are new. I'm going to onboard you onto the Trader Funding Program, and I'm going to tell you, what's available to you. Again, I'm going to give you some tips and ideas on maybe some strategies on how you might be able to trade and pass an assessment. It's interesting that I've met with so many traders this last month, and everybody, as you all know, everybody's got a different way of trading. So a lot of times I've been working with individuals and their strategies on what they do, and I give them some ideas of, if I was employing that type of strategy, what I would do, because we're all just trying to basically pass an assessment. And once you pass an assessment, it unlocks you to larger amounts of capital. So, and if you already took an assessment sometime in the month of August and you're like, shoot, I would have qualified, but you're just telling me now, don't worry, I'll circle back with you personally and I'll email you one-on-one, and we'll get you started. And if you haven't heard from me, always can go to support and let me know, or let our team know, and they'll get a hold of me. Anyway, moving forward, the Trader Funding Program, once again, I'm going to say this carefully. If you are new to the Trader Funding Program, you've never taken an assessment, you will get a one-on-one consultation, an onboarding consultation from me personally. If you're doing a retry, that means you failed an assessment and it's over $100,000 assessment. So 100,000, 250, $500,000, $1 million assessment. I want to help you pass an assessment. So you'll have a one-on-one consultation with me on a retry. So this way I can give you some ideas on how I would do it based on the strategies that you employ. And remember, these are 45-minute consultations. I found it to be very, very valuable, and we found it to be very, very valuable to our traders. And the feedback has been overwhelmingly positive. So, Trader Funding Program, make sure you take advantage of it, and especially in today's market volatility, this is a trader's playground. What we're in a trader's playground. This is This is how we make money, is when you have volatility rampant. It allows us a lot of opportunities to navigate in and out of the markets, and utilizing Forex analytics and trader funding program is one of the best ways to do it. Okay, like I said, this week, let's get into it. We have the Norges Central Bank. We have the RBNZ. We have retail sales at the end of the week. There are a lot of things that are going to be happening this week that can move the market. Let's start off with, I'm just going to say this. Sunday, thank goodness that Japan's on holiday. They're celebrating. I think it's Mountain Day. Does that sound correct? Mountain Day or Outdoor Day, whatever it is. It's Mountain Day that they are celebrating. They're celebrating Mountain Day, so we're not going to wake up with another 12% down on Sunday night. We talked about the Nikkei a couple weeks back, and we talked about the false breakout. When you see a false breakout in the market, you don't expect a 25% drop from the highs. That's like the last thing that I'm thinking. I'm like, oh, breakout leads to breakdown. I would thought, yeah, we might have had like your garden variety 10% down. This is 15%, but like maybe like a 10, 12% down. False breakout leads to a breakdown. I didn't think we were going to be down 12% on Sunday. Now, we had an aggressive bounce back throughout the course of the week, but I want to point this out with Japan, and this is the Nikkei, in case you guys are not familiar with the chart that I'm showing you right now. We are below what I would consider key resistance. Well, it is resistance now. It's previous support. So while we're below 36,800 roughly, you have to expect that the Nikkei is vulnerable to more of a pullback. And, that's going to be a 50% retracement of this entire move. So a 50% retracement is going to take us back up here to about, 30, let's just call it 37,000. So somewhere around that neighborhood, the Nikkei might find some resistance. So just keep that in mind as we navigate through this week, because it's going to have an effect not only on, obviously the Nikkei, but on the yen pairs, which we're going to talk about a little bit later. So don't go anywhere. Now, remember also, while I'm going through these charts with you, these charts, everything's chaptered. If you go across the timeline, you might see little hash marks where I talk about different parts of the markets that you might find more interesting, or you can go down below in the description, and there's usually timestamps where you can click on them and get to the appropriate point of the video. So especially if you watch this video, several hours after it's been released, that's usually by the time we get those timestamps put in. All right, let's continue on. So when we're dealing with the week ahead, Monday should be fairly slow. It should be fairly slow, but we will have some 3 and 6 month bill auctions. So those they shouldn't affect yields too much. But I'm just going to pull up the 10-year really quick, because the 10-year, and you can also see this, by the way, if you're on Forex Analytics, you can see this as well. And I'll take you to the charts here on the 10-year. But you can see in the 10-year, we are basically looking for a pullback, towards the 112 level in the 10-year. Now, I'm going to be watching these. And Monday, we just don't have a lot of data, so maybe you get a little bit of a break Sunday, Monday, unless there are geopolitical risks, especially with everything heating up in Ukraine, Russia, as Ukraine advances into parts of Russia. That's intensifying. We've obviously got the risk of an Iranian retaliation attack over the weekend, and those headlines might hit between now and the time the market opens on Sunday, or Monday morning in Asia. So just keep that in mind, that things can obviously change really quickly, but let's just make the assumption that nothing happens, and let's just hope for the best that nothing happens. In that event, we'll be looking for just normal, market reactions here. But obviously the markets can move wildly between now and the time, which happens to be Saturday morning, my time. Between now and the weekend end, there could be a lot of things that happen. So, okay, going back to the 10-year and some of these auctions. So we're seeing a pullback in the bond markets. This is the 10-year notes. We'll have, like I said, we're going to have 3 and 6 month bill auctions on Monday. Reason why I'm going to be paying kind of close attention to that, because if anybody's in a risk off mode, they tend to be buying the shorter end of the curve right now. So we'll just be watching yields and the bond market. If yields start if yields start falling because the bond market starts rallying again, that's going to get my attention. That's something we should be paying attention to. All right, Monday night we have Australian Wage Price Index. Now, the Aussie, we don't have a lot of data coming out of Australia this week. RBNZ is going to be pretty much in focus, but I want to show you guys something that I think is really important with the Aussie dollar. Now, I'm going to delete a few things for us because I think we have to. We need to clean up these charts a little bit. Let's delete that. This major trend line that was broken, as you can see here, was a false breakout that led us, lower. But I think we need to look at Aussie a little bit differently at this point. And let's, you can see we're in a pretty zoomed out fashion right now. And let's delete this extension because we overshot that. And we're going to leave, actually, we're going to keep that on there, but I'm going to put that out as an extension just in case we actually break down. Now, here's my argument with the Aussie. When you look at like daily sentiment index, and let me take you guys over here to this is the daily sentiment index. It's published in the Forex Analytics chat room. If you look around at a lot of commodities, they are pretty bearish. And I want to show you something else. And this is in our newsroom. Matter of fact, Gavin posted that hedge funds are most bearish on commodities since at least 2011, and that was in Bloomberg. So that was at the end of the week. So I want you guys to be thinking about that when you're dealing with like the Aussie, because the Aussie is a commodity type of currency. We had a capitulation type of move, as you can see, Sunday night. This is Sunday night, Monday morning. If you're early morning, if you're in the UK, we basically plunged to 63.50 and reversed. Now, when you're talking about the Aussie dollar, if you look at a weekly candle, and I'm going to go back to that daily chart here in a second, that's a bullish outside day, or it's not a bullish engulfing. It's a bullish outside week. Did I say day? It's a bullish outside week. It's not bullish engulfing. It's a bullish outside week, which is still bullish. It still should react like a hammer. Like a bullish engulfing, same type of situation. Now, if you take a look, and I'm zooming out on the daily chart. Let me move my head here. You'll notice that we might have a triangle developing that looks something like this, or maybe like this. However you want to look at it, what that suggests is these lows are very important to the market. Now, because it was a bullish outside week, that means that any decline that we see this week, I'm going to be looking to buy. So, and you have to think about like the geopolitical risks that are still around. If there is an escalation in the Middle East or in Russia and Ukraine, that theoretically you might get a reversal in the Aussie at first, because of quote unquote risk aversion. But because of how bearish the commodities market is, and inflationary pressures might actually increase in a wartime or an escalated situation, whether it's the Middle East or Russia or whatever the case may be, you might actually see commodity prices bottom out and start to rally. And that means that commodity currencies like the Aussie dollar on a swift sell-off might be more of a buy. So I bring all this to your attention because if I'm looking at the Aussie dollar and we do see a little bit of a sell-off to begin the week, I'd be looking for dips to be on the long side of the Aussie dollar. So let's just kind of map that out for you. If we get a dip back below, let's call it 65 cents, somewhere in this area, this might be an area that we look for longs somewhere down. Whoops, that's not what I wanted to grab. So look for long somewhere down in this vicinity. We'll come back and revisit this next week, or we'll revisit it on the F.A.C.E show on Monday and Tuesday. So if you don't listen to the free shows where you can catch my analysis throughout the course of the week and the rest of our team, you should be checking that out because it's free to attend and you can watch the recordings on YouTube, yada, yada, yada. Okay, continuing on. So Monday night, we have Australian wage price index. So keep that in mind because that could be, or it's Monday night, Tuesday morning, excuse me. That could keep some volatility in the Aussie. Also realize that the Aussie, if you didn't see this already, we're closing in on the 618 retracement already at 66.30, which is going to be key resistance on any rally right out of the gate. Okay, Tuesday we have UK claimant count change, average early earnings index, and throughout the course of the week we have a lot of UK data. So sterling is going to be pretty much in focus. Now I'm going to just show you this chart really quick, and I'm going to tell you I've been very upfront to all of our traders in the Forex analytics community. I don't have much of a feel for the sterling. And it's okay. I mean, when you're looking at a currency pair that's plagued with data going in two opposite directions and a central bank that's really unsure of what they're doing, and then you have riots in a country which has obviously affected the UK and will affect economic data probably for the month of August and their August readings. I mean, it's a toss up. It's hard to trade. So. And some of you this might be the best type of trading environment that you have been looking for in sterling. But for me, I don't really have a great feeling on what to do with it. But I will tell you this, the one thing that's obvious is you can see that the 200 DMA seems to be pretty key support. So if you're going to be bullish, you just don't want it to break below the 200 DMA. Now, if you clone this, you'll notice that we're in an ascending channel, right? And we happen to be somewhere in the middle of the channel. So you notice we're in between the 50 DMA and the 200 DMA. I think that a break above the 50 DMA would be bullish, and a break back down below the 200 DMA would be bearish. Again, there's a lot of data coming out this week with the UK. So sterling's going to have some volatility here, and maybe you have a better feel for it than I do. Have at it. All right, so moving right along. Tuesday, we're going to have U.S. producer prices. Now, I do want to show you two different charts because we have not a lot of data in the Euro zone. So let's start off with the Euro and U.S. PPI. The Euro, I'm still bullish. I do have a portion of my Euro longs. I have about 2/3 of what I had 2 weeks ago. So I'm still bullish. The thing that freaks me out a little bit being long the Euro is that we had this false breakout, and a rejection above 110. That does worry me. Now, the flip side to that argument is you'll notice that the consolidation has been pretty shallow. And the pullbacks, and let me just show you what I mean by that. We've been limited to a 50% retracement, if I'm not mistaken. Yes, you can see the low to high there. The 50% retracement has contained any dip. So it's a little bit of a toss-up. I think that any dip below 109 should be very well supported. Now, remember, we have U.S. producer prices. The market is not so focused on inflation right now. The market is really focused on job growth in the U.S., but that doesn't mean that inflation data can't move the market, and it won't come back into focus, especially if PPI and CPI this week remain sticky. All right, so just keep that in mind. So 109 or dips below 109, I think will be supported in the Euro, and moves back to 110. You're obviously going to find sellers, and we're going to have to make a decision from there throughout the course of the week. Okay, Tuesday night. The RBNZ. All right, so this is where the focus is going to be Tuesday night, which is obviously Wednesday morning in New Zealand. Now, the New Zealand had very limited follow through at the end of the week as we broke above this resistance. I'm going to delete that. But what it does do is it shows us how important this level is at 60.40. And if you utilize Forex analytics and you're with me, in the mornings or in the afternoons, depending on where you live, or in the evenings, but if you do analysis with me every day, and that's one of the benefits of being in the Forex analytics community. Being part of the trader funding program is you get to watch the private shows that myself and the rest of our team do for you. The morning edge is where I spend, 30 minutes, 45 minutes going through these instruments, highlighting the key levels of the day that we're looking to trade against. So in this case, if you've been watching me do analysis on the Kiwi, you know that 60-40 level, 0.6040, has been written down so many times over the last couple of months because it's been a huge pivot in the market, and it continues to be a pivot right now. Now, obviously, with that being said, let's get rid of some of this stuff just to clean up the charts a little bit. You can see that we have, and I'm going to get rid of that. I want to get rid of that. And we're going to keep that trend line right there. What you'll notice is we have this double bottom, or very critical support for bulls. But the risk this week is the RBNZ. There is talk that they could cut rates, and if they did cut rates, I believe it would be more of a surprise for the market. We would see some downside pressure in the Kiwi. But the flip side to that is, because it's almost a coin toss on will they keep rates unchanged, or are they going to cut rates? Now don't forget, we got a rate cut from Banxico. We had a very similar situation this last week where Banxico was not expected to cut rates, or it was on the cusp. Some half the economists believe they would, half the economists believe they would stand pat. They actually cut. So we're in a very similar situation with the RBNZ this week. So if they keep rates unchanged, there is a risk that the Kiwi will rip higher towards the 618 retracement, or the 6085 level, maybe even the descending trend line once again, which is a multi-year descending trend line. So let's keep a very close eye on Kiwi as we approach resistance. And also, very similar to the Aussie, that flush out that you saw on Sunday night, that should be a warning that you don't want to be shorting down at these levels. You don't want to be shorting sub 59 cents, because you can see that the market is very much buying the Kiwi down there. So any dip back below 59 cents should probably be bought. The flip side is, if we get a rally towards 61 cents or 61.20, what is going to happen up at these levels? So as you can see, the Kiwi, there's a lot of opportunity to make money in this particular market this week. You just have to be very smart about it as we approach Wednesday morning or Tuesday night in New Zealand. And also remember, this happens at 10 p.m. Eastern Tuesday night, and then 1 hour later is the press conference. So just so everybody's aware. Wednesday, we will have UK CPI. Like I said, we've talked about sterling and how that's going to be in focus. But on Wednesday, we have US CPI. So let's take a look at the US dollar, or the dollar index. Now, the thing about the dollar index, and I want to show you something. This is pretty important as far as I'm concerned. The dollar index, you can see this blue trend line, right? We basically broke it, and we're consolidating on it, below it, right around it, okay? Which suggests after a sell-off in the dollar, and you can even go to the whole move here. I mean, bounces have been very shallow. We can't even get above a 38% retracement in this whole last leg lower. I mean, while we're below 103.70, the risk, in my opinion, remains lower. Now, we'd have to break this dotted triangle support in order for it to be really bearish. But with US PPI this week and US CPI this week, if inflation remains in that downward trajectory, there's a good chance the dollar could get really wrecked this week. There's a good chance that we could see a lot lower prices in the dollar this week, especially if inflation continues to trend down. So keep that in mind as we go into Wednesday. Now, Wednesday, or actually, let me just say this: Thursday morning, early morning in New Zealand, RBNZ Governor Orr is making. It's weird. Let me say this: he's making his rounds on on the New Zealand like radio talk shows and whatnot, and I don't ever recall RBNZ Governor Orr doing this. Now, I may be wrong, so don't hold my feet to the fire here, and maybe you can jump down in the comments down below and let us know if this is something that you've seen him do before. But maybe it's a new PR campaign. Maybe it's because they have something exciting planned, like starting rate cut campaigns this week, and he's planning all of these press conferences Wednesday morning, early Wednesday morning, early Thursday morning, which is Wednesday evening for me, but Thursday morning in New Zealand. Maybe he's the PR firm has planted him out there because he's got to really defend his actions. So I thought it was kind of interesting, something that we should all be thinking about. Anyway, if you're trading the Kiwi, be aware of that situation. By the way, if you all are watching these videos every week and you feel that they're very beneficial to you preparing for your trading week, please give us a thumbs up. Subscribe to the channel. It's free to subscribe. If you didn't know that, it's free to subscribe. It's also free to hit that bell icon so you're notified on your mobile device. You're notified on your desktop that a week ahead video has been released. So click on the subscribe. Yep, just click on subscribe. Just click that. Hit a thumbs up. Hit the bell icon. And then if you have some comments about anything that I've said thus far or anything that I say throughout this video, jump down in the comments below and let me know. Last week I missed something, and one of you jumped in the comments and reminded me, and I was like, oh yeah, Australia had this. Australia had a rate decision. I forgot that. And you guys jumped in there. So thank you so much for your participation in that. All right, let's continue on. Speaking of Australia, Wednesday night, Australian employment is happening. And we talked about the Aussie, but let's talk about the Aussie Kiwi, because the Aussie Kiwi has been, we saw a false breakout from a couple of weeks back. Let's get rid of this. I don't think we need that right now. And let's move this to here, and let's just get rid of this, and let's get rid of this. Actually, I think we're going to recycle that. And I think between the RBNZ and the Australian employment, you've got a couple of trajectory outcomes from here, whether it's to be on the short side of the Aussie Kiwi up around the 111 level or 110.85, or being on the long side of the Aussie Kiwi somewhere around the 200 DMA or this 108.40 level. And I think this is the way to play the Aussie Kiwi this week, especially with central bank meetings, employment data, so on and so forth. Oh, I think I said earlier that we didn't have a lot of Aussie data, but we do have Aussie employment, I guess. We have Aussie employment and Australian price index. Okay. Also on Wednesday night or Thursday morning, we have China industrial production. Now, one of the big ones that's coming up this week is the Norges Central Bank. The Norges Central Bank is expected to keep rates unchanged, but I want to show you, and I know many of you know this because I talked about it a couple of weeks ago, and I believe, if I'm not mistaken, it was one of my setups from a couple of weeks back about shorting the US dollar Norwegian krona at 11. 14, 15, 12. And I think, if my memory serves me correctly, from several weeks ago, I shorted the US dollar Norwegian krona at 11.13, telling you guys about it ahead of time, and we got a drop, really aggressive drop. Oops, it was from here 2 weeks ago. We got an aggressive drop back down below 11. Now, those are the levels that I'm watching because we are still very much in a triangle type of formation. So, but the Norges Central Bank could end up moving the markets. I personally feel that any move above $11 right now should be sold. Why it hasn't rallied and broken out in this environment with higher volatility, I'm unsure, but that to me makes me lean to the short side, at least for now, at least while we're below that resistance. All right, continuing on, that was Thursday, and then Thursday we have U.S. retail sales, which is going to be a mover in the market because We have we're going to be looking at the state of the U.S. consumer this week. Now, also remember, we have earnings from Home Depot, Walmart, Ross Stores. That is those are three companies that will really give us some other insights into the behavior of retail, the retail spending environment amongst U.S. consumers. We will get U.S. retail sales and obviously weekly unemployment claims on Thursday, but those retail sales might be market moving this week. Also on Thursday, we have the Empire State Manufacturing, Philadelphia Fed, a couple manufacturing data points that the market might cling on to. Thursday night, we have Chinese PMIs. And then Friday, let me confirm that. Thursday night, let me just confirm that. I want to make sure that that's not right. Actually, we do not have Chinese PMIs this week on Thursday. I made a mistake there. But on Friday, we have UK retail sales, US building permits, housing starts, and University of Michigan consumer sentiment and inflation expectations. All right, so that's going to wrap us up with the data that's happened throughout the course of the week. That doesn't mean we're finished here. I actually want to go through, a lot of the key markets like gold, copper, talk about crude oil, especially the move that we've seen in crude this week. We'll talk about the S&P, NASDAQ, Dow, Russell 2000. We need to talk a little bit about Bitcoin as well. And then we're going to review all the trade setups from last week, and I'm going to give you my best 3 setups from this week. Now, remember, if you're in the Forex Analytics community, you can actually be following along in the trades room and know what positions I'm in. Now, this is and you can see this is one from me. It says closed the euro 1/3 of the euro US dollar. What I picked up below 109 this week. Now reducing size. Current average price is 108.90 on my longs. And, you can see comments like from Glenn says, Blake, I was short with you on the Aussie yen and the US dollar, Japanese yen. Cheers. And that came from Glenn. Being in the trades room gives you the opportunity to see what I'm doing. That doesn't mean you should be trading the way that I trade or taking the positions that I take, but just understanding where my head's at and why I'm in a position is important. I'll give you an example. In the trades room this week, I was trading the US dollar Swiss franc, and we will talk about this during the review of what trades I took this last week and the trade setups that we talked about. But there was a comment from Ishmael, and Ishmael, if you're listening in, thank you for listening in. I said, okay, I'm closing out my Euro Swiss for 78 pips and my Aussie dollar longs. And Ishmael asked why. I thought we broke channel resistance. And I said, Euro Swiss or Aussie dollar? He says, Euro Swiss. I said, oh, I knew we were at resistance and this is previous support. So I knew that there might be some risk aversion coming in. So I wanted to, take my position, my longs off there. He said, okay, thanks. Love the show, yada, yada, yada. This is, again, part of being in a community, knowing what I'm doing or what other traders are doing, and being able to ask that trader, said trader, or myself, or Ryan, or K-Man, or whoever else, being able to access us throughout the course of the day, which I happen to be there probably about 15 hours a day. And if I ran away from my desk, I'm coming back and you can ask me then and I'll address you at that point in time. What a benefit that is to you. Not necessarily because you want to do what I'm doing, but understanding why I'm thinking what I'm thinking. Doesn't make me right, but getting an opinion from other traders, especially traders that have been in the markets for nearly 30 years like myself, that's a nice benefit, being able to have conversations like that. So make sure you're involved in the Forex Analytics community. That's one of the benefits of being in the Trader Funding Program. And even if you didn't want to be in the Trader Funding Program, remember it's only $1 for 10 days to take advantage of being inside of our community, just to try it out. See if it's right for you. And if you do that, download the mobile app while you're doing it. Okay, let's continue on. So I wanted to cover a couple of other markets that I think are very important, one of them being gold. If you look at gold, you'll notice that gold pullbacks have been very, very minor. And I'm just going to say it really easily for you. While we're below the 50 while we're above, excuse me, the 50 DMA, there is zero reason to be on the short side. Do I think gold's overbought? Not necessarily. I think it's worked off. You look at its daily RSI, it's worked off all overbought conditions, and now it's just consolidating at highs. When you consolidate at highs, that's usually not a bearish thing. Doesn't mean it's bullish necessarily, like you should be buying it right now. But if I was short, I sure would be nervous, right? Now, if you look longer term in gold, you'll notice that we're up against long-term channel resistance. But hell, we break above 2,500. It's going to be hard to stop the momentum that you see in gold. Now, that begs the next question is, what about silver? Because if you look at silver, silver has been quite bearish. And we were looking for a bounce right there at 27.50. We got it, right? You can see it right here. This is where the bounce happened, and that's what we got. So I can delete that now, and I can delete this now, or you can actually still look at it as still it's a Gartley pattern. That's close to an 88% retracement, 161% extension. And if gold bounces, well, there's a good chance that silver could continue to bounce, right? So keep your eye on silver, especially if gold continues to rally. Continuing on, let's talk a little bit about what's happening in the crude oil market, because crude has been really interesting. We had an inverted head and shoulder pattern intraday. Now, if you didn't see that, I'll just show it to you. This is something that we've been looking at all week in the Forex analytics community. I probably just need to delete some of the stuff. Well, maybe not. We'll just keep it on there for now. You'll notice that there was an inverted head and shoulder pattern that looked just like this. And if you were in the Forex analytics community, you knew about it. And we have completed that inverted head and shoulder pattern. Now, here's the other thing about crude oil. Who would want to be short crude oil if there's an Iranian attack in the Middle East? My opinion is crude will be trading above 80 pretty quick. So it made sense when you had this false breakdown, and we talked about it all week inside of the Forex analytics community. We talked about it all week on the free, mind you, the free show that you can attend every single day called the F.A.C.E show. This is the F.A.C.E show, and you can register to be on it every single day. We've been talking about crude, like why would you want to be short crude oil in this environment this week? So you got a false breakdown this last week, and then you've had a rally all week long. Again, if there is an escalation in the Middle East, you should get a pretty substantial rally. All right, continuing on, let's take a look at what's happening in equities really fast. I want to take you over to the S&P. This is a really big and important chart to me. Okay, I'm going to delete it. Well, actually, you know what? I think this chart's appropriate. We're going to look at this chart really fast. Okay. There you go. And let's just duplicate that. This is a cleaner chart. The other chart's a little messy, so we're just going to leave it like that. So we came out of an ascending channel. And so because we came out of an ascending channel, that means that any move higher into resistance should find sellers. Okay? So that level that you see right here is 50. That level right here is 5,400. I don't think I have to say anything more than that. I think that's pretty basic technical analysis. You know, if you think about it, if hopefully, fingers crossed, nothing bad happens over the weekend, you might get a move higher in the S&P to begin the week, especially if there's no escalation in some of these geopolitical hotbeds that we're dealing with. If that is the case, that the S&P might rally back to 5,400 to kick off the week. All right, continuing on, let's take a real fast look at the NASDAQ. Notice how the NASDAQ bounces have been pretty shallow here. So we hit the 88% retracement, we bounced. Let's delete that. And like the S&P, we came out of a channel. Now you'll notice that the NASDAQ is nearing its 38% retracement and previous support. So I'm just gonna show you this. And the NASDAQ is underperforming the S&P at this point. So if you get a rally back to previous support or the 38% retracement, you're probably going to see some selling transpire in the NASDAQ, something to be looking at. Russell 2000. Now we had that false breakout of the highs. We talked about it because this bullish pennant, we falsely broke out and then we broke down. Now you have to be really careful. Let's clean this up a little bit. Let's delete that. Let's delete that. Let's delete that. We don't need this. We don't need this. We have that false breakout. We can keep that. You can keep this fib level on here. These are previous breakout points. You can see them right here. Previous breakout point, right there. Let's delete this one. We'll get rid of that for now. We don't need this for now. And let's do this. Now, there's a lot of people. I'm just gonna say this because I know there is. I'm gonna say this because you hear them all on podcasts and all these fund managers. They tell you they're long Russell 2000. They were long, and then they thought they had it right they literally had it right for about a week or two, and then you had a reversal. So the thing is, I would be really worried right now if I was long Russell, because this one came out of the blue, right? Just you gap lower because of the Nikkei breakdown. You barely had a recovery. If you break below the 200 DMA, that is going to be outright bearish for these small and mid cap stocks. So just keep that in mind. That's usually a growth story too. That's when you talk about recession fears, people that are fearful of recession, this is where it usually shows up in the stock market. It's going to be Russell 2000 here. All right. That should wrap us up for just some of the main markets that I wanted to talk about. Now, this is the point where I want to talk about the three setups from last week. So the first setup from last week was the Euro Canadian. And I'll tell you, it didn't work. I said in my notes, long Euro Canadian while above 50.50, which would have been right here, right? Now, that didn't stop me from trading the Euro Canadian. I actually bought the dip last week as we dipped a little bit further. You could see it in the trades room. If you're in the trades room, you can see where I bought the Euro Canadian. And I bought it at, opened it at 150.0067. So basically 150 is roughly where I bought it. I ended up getting out of it for, I think I lost like 20 pips or something. I didn't want to deal with it. So first trade, long Euro Canadian while above 50.50. It didn't work. It dropped below 50.50, so it didn't work. Okay. Trade number one. Trade number two, long Euro Swiss, as long as not major headlines over the weekend. Well, there's no major headlines. And so obviously on Monday, I was looking at the Euro Swiss, especially following the big fall in Japan. So the question is, did I get long the Euro Swiss? I did. I bought it at 0.9326. I got out of it at 0.9404. So hopefully you all were able to trade that. I was late to the game because obviously the move happened in Asia. By the time I woke up, it had already rallied back, but I still played it to the long side. So I have to say that trade worked, and it worked well for me. Hopefully it worked well for you. The next trade, so one worked, one didn't. The next trade was sell dollar yen, bounces to 150, mine the long-term 50% retracement for support. Well, the dollar yen did continue to bounce. Unfortunately, I was looking for a bounce towards 150. We didn't quite make it. I was like anywhere close to it. We only got as high as 148 and change. That hasn't stopped me from trading the yen, but it didn't quite make it up there. So we can just call that a scratch because it didn't make it to the levels that we thought. So one win, one loss, one scratch. All right. This week, my top, well, not my top. I'm just going to say my three setups for this week that I want to give you because sometimes my top setups I reserve for the Forex analytics community. So yeah, you got to appreciate that, right? I know those of you in Forex analytics do. So let's talk about three setups for this week. So the first setup is I do want to sell the S&P. Anywhere between, here, let's go over to this chart again. anywhere between 5,400 to 5,470, because 5,400 is the 5,400 is the previous support. Okay, 5,470 would be the underside of this channel. So let me move this over. So anywhere between there, I am looking for short risk, and you can see that's a 50% retracement, and that would be the 618 retracement. A lot of resistance up there. That's going to be a gift if we're able to short up at those levels. That's trade setup number one. Trade setup number dos, New Zealand yen. Now, there is a lot of data happening this week, so let's clean this up. Let's clean this chart up a little bit. Matter of fact, I'm just going to clean it up completely. I'm looking for a double top breakdown of 87.50. Now, let me show you guys something really quick. This is the high. That's the low. That's a 38% retracement. That is a potential double top. So below this neckline right here, I'm looking for a short in the New Zealand yen. Back down towards whatever, 83, 84, 85, somewhere down there. All right. So basically a double top setup. I'm looking for a breakdown of 87.15. Setup number 3 is a dollar pair, the dollar Swiss. I am looking for shorts in the dollar Swiss. Let me just show you guys real quick. I need to do a little bit of drawing here. At 87.35 or 87.30, you can see that's previous support. That should act as current resistance. Let me pull this over, and let's do a little bit of work. You guys know I still like this as a potential head and shoulder pattern, longer term, but that's not going to prevent me from getting on the short side sometime this week. So if we can get a rally back to the 50% retracement somewhere up here, I'm looking for a short. Ooh, that's not what I wanted to draw. I'm looking for a short up here. And you know what's going to make it extra spicy for me and for us is if there is no escalation of, again, let's hope there's no escalation of Middle East tensions this weekend. That'll allow for a bounce back up towards those levels. But that doesn't mean just because it didn't happen this weekend, there aren't heightened risks. So any move back to 87.35, I'm looking for a short in the US dollar Swiss franc near term. So with all that being said, if you all believe that this video is instrumental to you preparing for your next week of trade, and you appreciate the fact that it's Saturday morning and I'm sitting here not with my family, but making this video for you, helping us prepare for the week ahead, thumbs up, comment down below, subscribe to the channel, and I appreciate you. And I especially appreciate all of you that have spent your time with me, because I know it's your most valuable asset is the time that you have on this planet. So thank you for sharing it with me. My name is Blake Morrow. Have a great remainder of your weekend. I will see you Monday morning on the F.A.C.E show, bright and early. See you guys there. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.